if the technology works with us. So we'll just start with a little bit of a background on Morrison Lowe for those who don't know us. Morrison Lowe is a trans-Tasman company which pretty much exclusively works for local government. We do a little bit of federal government or central government work in New Zealand, and all of our staff have worked in some capacity in local government, either in Australia or New Zealand. So we consider ourselves to be industry specialists. We do like to challenge the status quo, so we do like to keep you thinking. And we as a company believe that some of our key attributes is that we have a really strong understanding of how local government operates. We have really good experience in asset management and financial management, and we understand what best practice is in local government, and we have strong views on where we see it going into the future. Just a really quick background to how we get to this point where the Office of Local Government are asking for a preparedness survey for Special Schedule 7. For those of you who remember back in Dubbo a few years back, we had a conference of local government delegates called Destinations 2036. And one of the key outcomes of that was that the OLG was going to take an infrastructure audit of local government. That was completed in 2013. And that involved, I think, a desktop survey of all the councils and an on-site survey which was carried out by Morrison Lowe of about 35 councils to check the systems and processes that the councils had and to provide some comment on some of the infrastructure information being reported by councils. One of the outcomes of that was that Special Schedule 7 at some point in time had to be audited. There was a wide variation of what people were inputting into it, all with the best intentions, but no rigour around how it was calculated, how it was put together. And those of you who have been involved in Fit for the Future reforms and the putting together of an improvement plan will know that there's a large emphasis on that, on some key benchmarks or some key ratios which the office developed, and 3 of those were directly related to infrastructure and came directly out of the Special Schedule 7. So it makes it really clear that Special Schedule 7 is now a really important document and therefore needs the appropriate rigour around some of its findings. What's also clear is that because of the wide variations in Special Schedule 7, there would be some concern if you jump straight to a full audit of Special Schedule 7. One, it would be not clear from an auditor's perspective exactly what was to be audited, whether it was the cost of satisfactory number, the required maintenance number, or the condition audit. So it's trying to get some rigour around that, but also it's no one's interest to get a whole lot of qualified audits. So really, the department are taking a 3-step approach to this. Is one is helps to see how prepared local government is to have Special Schedule 7 audited. In the second half of this year, the department are going to work with industry and some of the working groups to actually redefine what is required as part of Special Schedule 7, and the aim being the 3rd step of the process is that 2016 would be a full audit of Special Schedule 7 as part of the financial statements. So that's just a really brief background as to how we get to the point we are at today. So for those who know, the office would have put out a spreadsheet and a guidance note, which I think Mark has included as handouts as part of the webinar, so you can certainly access and download those for those who don't have it. But the spreadsheet is pretty much based on the infrastructure audit which we carried out in 2013. And it's a mini version of that. And the aim being is that your auditors need to look at 4 areas of knowledge or 4 areas of practice. The first being what you know about your assets, the second being about the strategic and the planning processes around it. The third is that how does that all link with your operations and maintenance practices, and the 4th area is about how you store the information. And they're they're key elements to the questionnaire, and for the engineers out there, in some respects it's almost like a mini maturity analysis, and really what the office is after is for you guys to work with your auditors to see how you guys line up. Okay, so putting a graphical view about what they're trying to do, for those of you out there who recognise, that's one of our clients' special Schedule 7s. We haven't identified them, but that's not the aim of it. Really what we want to highlight is that the data and knowledge will show that you're able to accurately calculate the cost of satisfactory. And the view being that if you've got good asset knowledge, good data around your assets, then it really doesn't matter how the department tell you how to calculate Special Schedule 7 at some point in the future, you should be able to do it. Okay, so when your auditors are going through the checklist, keep in mind that you need to be able to have certain information which allows the calculation of cost of satisfactory. If we have a look at the works and operations section of the assessment, that is based on trying to work out whether as an organisation you can accurately calculate or determine what the actual maintenance expenditure was for the year. Okay, so again they'll be looking about how your cost works, how you determined that actual expenditure on maintenance. Okay, the information system, I suppose, and again we'll talk about in a little bit more depth in a second, is about whether you can achieve some reasonable reporting on your asset and your asset condition. Okay, so you're looking at the right-hand side of the spreadsheet, and there's been some conjecture about whether the asset condition should be broken down by gross value or by written down value. I suppose, again, if you have the right information in the right system, it's almost irrelevant. You should be able to report in any form that the department or division ultimately determines. The fourth and final section of the spreadsheet is really aimed or looking at how do we bring all this together. Okay, so it's looking at the strategic and the asset planning processes, and it really starts to look at your asset management plans and systems and processes within the organisation that link asset management to the overall organisational context. Okay, so let's just quickly go through the spreadsheet, and let's start with the asset data and knowledge component of it. And what we will do is sort of just go through the sub-elements that the Office of Local Government have identified, and I suppose we'll highlight what we think that your auditor should be looking for. Okay, and again, I suppose you need to remember this is new for the auditors as well, and again, it's not going to form a part of the statements this time around. So it really is an opportunity for you to work with your auditors, so both you and the auditors get a really good understanding of what's going to be required at some point in the future. So if we have a look at the elements, and this is probably the largest component of the survey, it looks at how you classify your assets, what attributes you have of the assets, the condition data, the life cycle costing, and the depreciation data. Okay, so if you go right to the top and you look at the asset classification, it really is looking at how you've broken your assets down. Now, in roads, in some respects, that's reasonably easy because most councils have a road hierarchy, and that could be the state government classification, being state roads, regional roads, local roads. Again, it could be your own individual council road where you might break those down into arterial, distributor roads, or local access roads. So there's no right or wrong way, and again, you shouldn't be constrained by some of these. You need to put these classifications and hierarchies in place which best suit your organisation. But the aim of the preparedness survey is to see that you understand the breakdown of those assets. For example, in parks, you may break those down into regional parks and local parks. Again, for some of the smaller councils out there, you may not need a hierarchy. Okay, so it really is, how have you logically broken down your asset base? The second element that the auditor and you need to work through is about the attribute and location data. And this is really about, do you have enough information on an asset to make good asset decisions about the data? Now, you can go overboard on this, and we would suggest that that you don't. But do you know enough about the asset? And again, depending on the organisation and depending on their asset management philosophy, that can be a lot of detail or a limited amount. But to mean, in terms of a limited amount, it would need to be, for roads, it would need to be length and width and dimensions, it would need to be surface type and the like. So again, you may not have some detailed information on that, but to mean, as long as the information is sufficient enough for you to make some reasonable decisions on the condition on your assets. The condition data, again, is very important. And you'll see our comments in the next slide, where we believe that you cannot work out what the cost of satisfactory is if you have no idea of the condition of your data. So you need, one, a system making sure that you know the condition of your data, making sure that you also have a condition data assessment strategy. And again, it's not saying that you need to collect 100% of your asset data today or tomorrow, but you may collect that as 20% of an asset group per year. You may decide you're going to collect it every year, but then you need those strategies in place around the condition data, which ensures that when you build a new road or you build a new park or you refurbish a building, that work flows through to updating the condition data in your asset register. Okay, so that at all times you have the most up-to-date condition data for your assets. Okay, and that should become an integral part of the capitalisation process as you do at the end of the year for your finance stuff. You should also make sure that your asset condition data is updated on a regular basis. The department also want to know if you know how much your assets are costing you, and it sounds like a reasonably simple question, but our experience is a lot of councils actually don't know what their assets are costing them, or what they're going to cost them over the life of the asset. And our view is very clear that councils need to start working towards business case analysis to start justifying expansions of their asset network. And for those of you who have been involved in the royalty to the region stuff, you'll know that a lot of the state government funding now is based on business cases. And that really is trying to make informed assessments and judgments about whether you as an organisation can afford and remain sustainable by expanding or building on your asset base. And the last section shouldn't be a problem for most of you in terms of the road, because the road valuations have to have been done as part of this financial year period. But it's making sure that you have the asset information and the valuation and depreciation information up to date and current. Okay, so again, it's getting the asset information and the financial information linking. Okay. Important, I suppose, in that element is making sure that your methodology is in place. So what should you be preparing for your auditors to have a look at? Well, you probably should be getting out your AMPs and showing them the asset hierarchy and how you've broken those down into each of the various elements. And remembering that a lot of this data must be consistent with the information you're providing in Note 9A of the financial statements. Okay, so, and look, when we did most of our Fit for the Future work, most councils had a pretty good linkage between Special Schedule 7, and particularly in the dollar information, and what they had in Note 9. So that was, I think, pretty well done in the last couple of years. But you need to, for your auditors, show them the asset hierarchy, go through the registers, show them the attributes you have and how you use those attributes, and to demonstrate that you have enough attributes in the assets to make sure that you can make informed decisions on your assets. Again, I would be showing my auditors the condition matrix that I use, how often I collect that data, and again, I don't think it's right that auditors question the frequency. That's purely a technical decision, but you need to make sure that you have a system in place which says I inspect my roads every 5 years, or I inspect 20% per year, or I inspect my footpaths on every 2 years, or whatever. But you need to make sure that in the interim that all the rehabilitation and the capitalisation processes also flow through to updating the condition data. Okay? And I suppose we want to really clearly emphasise that we don't believe that you can work out accurately the cost of satisfactory unless you know the condition of your data, of your assets. So it becomes an imperative, that as an organisation you need to know the condition. Okay, and if you don't know the condition of some of the small asset groups, you need to start working towards how you're going to get that and how you're going to get that into your asset registers before the audit process commences in 2016. Okay, so again, it's making sure the systems and processes to keep your asset data up to date and current are in place, and again, not dictating people how much data and at what level it is, but making sure that you as an engineer and the finance people work together to ensure that your asset data is at a level which allows you to make logical, structured decisions about your assets. Okay. So if we move on to the works and operations section of the OLG spreadsheet, and I'm deliberately leaving the strategic stuff to the last because I think that is where it overall encompasses the whole lot. It really is focused on how you determine the actual maintenance expenditure. And that seems reasonably straightforward and reasonably easy until we start to work out that there is a difference between operational expenditure and maintenance expenditure. And again, in an organisation, there are some definitions, I think, in the guidelines for IP&R about what is maintenance expenditure. And it generally doesn't include activities like utility services, cleaning of assets and the like. So for those organisations who allocate funds or allocate costs to large numbers such as road maintenance, stormwater maintenance, buildings maintenance, you need to work out and how you're going to identify what is maintenance expenditure, what is operational expenditure, and what is renewals expenditure. So if we have a look at the elements that the OLG are looking for the auditors to assess, is it really, how do you account for your operations and management of your maintenance activities? Okay. Now, as I have said previously, as I said previously, how are you going to distinguish the maintenance group, the expenditure groups we've got down the bottom? Because look, at the end of the day, it's going to be critical in terms of how you allocate maintenance expenditure, how you allocate capital renewal expenditure, and what is operational expenditure. And for those who are our clients as part of Fit for the Future, will really know that the impact of maintenance expenditure versus renewal expenditure had on the operating ratio really has a major impact in terms of how you allocate funds. Okay, so how do you do that? And there's lots of different ways to do that. Whether it be an activity-based costing, whether you are one of those councils that run a maintenance management system. But again, there needs to be a process or a system in place where you can identify the different types of expenditure, what those expenditure items are, and how you allocate them. The second element sits around some of the IP&R guidelines in terms of, do you know what your critical assets are? Okay, and they're those assets which are critical to the operations of the community. So again, are they identified? And they should be identified in either your asset strategy or in your asset management plans, or both. Okay. The second question, which most people haven't addressed, is that what do I do about those, and what risk management strategies do I put in place to identify those? But that's again starting to get onto good asset management processes where you actually start to address some of those issues. Okay. So what should your auditor be looking for? He should be looking for, I suppose, the breakup in your cost ledger which identifies maintenance expenditure, what activities get costed to those, and whether they are consistent with your definition of what is maintenance. Okay? From an operational point of view and from an organisational point of view, you really need to ask yourself what of that maintenance expenditure could be renewal expenditure and what is actually extending or renewing the life of my asset, because again, that has a significant impact on your operating performance. Okay? But again, you know, our definition of maintenance is those activities which help your asset reach its useful life. Okay, so the really clear stuff is things like edge brake repairs and pothole patching on roads, you know, patching of carpets and walls, and fixing broken windows in buildings. What is not maintenance expenditure is things like cleaning buildings or sweeping streets. Okay, that's clearly operational and really has no impact on the life of the asset. Clearly, however, there's that point where renewal expenditure, or large maintenance expenditure could be classified as renewal expenditure. And again, the easy rule around that is that if it extends the life of the asset, it's renewal. But there's a crossover point there which the engineers and the technical people need to agree with the finance people about what that is. So a small heavy patch, for example, on a road may well be maintenance. When it gets to a certain size, whether that be 5 square metres or 10 square metres, it starts to become significant and may actually be renewals expenditure. But there's that linking, I suppose, of the asset and the finance teams who must get together and start to get some clarity around those. Importantly, from the auditor's point of view, is that how as an organisation are you identifying those elements? The next section of the spreadsheet has to deal with information systems. Okay, and again, because there's going to be a review of Special Schedule 7 later in the year, and that review will address whether the assets should be broken up by written down value or gross book value, or whether some other measure should be in there. You need to make sure that whatever information you have on your assets is collected in a logical form, so that no matter how the Office of Local Government dictate or ask you to provide, you should be able to provide that. Okay. So the first thing we would say is that your asset registers should be in one system, and I would highlight that that does not mean that you all need to go out and buy asset management systems. Holding those in spreadsheets is more than fine. They have their issues in terms that if you've got your asset data in spreadsheets, that's fine, but you need to make sure that there is a corporate copy of that. So there are some security issues and some currency issues around how you do that. Okay, but having your asset data into a spreadsheet is perfectly acceptable, provided that it doesn't get corrupted and there's enough security around it, and that as an organisation that you are confident that you have your information securely located and securely stored. We have systems integration, and I suppose the real issue there is an integration between the asset and the financial data. So if you have a look at the current Special Schedule 7, it asks you to break asset condition down by written down value as percentages. So it's very clear that you can see that you need to have an information on an asset, whether it be a component of an asset. You need to know the condition of that component and what its written down value is. Okay, so the system that you have, whether it's an Excel spreadsheet, whether it's one of the corporate systems available, or even whether it's a paper system, can you get that linkage between the finance information and the asset information? Okay. So what should your auditors be looking for? They should be looking for a consolidated asset register. They should also be looking to make sure that you can link your asset data and your financial data. Now, a few years ago, we used to have two systems. We used to have an asset register and we used to call a fixed assets register. A lot of the new systems are now going to one consolidated register. And again, it doesn't necessarily matter as long as that you can get those two informations to link. So you can still have the two systems as long as you can get that information out there. So the real question from a organisational point of view, you should be asking yourself, is your data stored in a and is it logically structured? And are you able to get the information out of it that you want? So can you really get information out of your system which is usable for your council? Okay. The last area that the office are wanting to assess is what they've called strategic asset planning processes. And really it just ties together the first three elements of the program. Okay. And the elements are asking about your asset management plans. And your asset management plan really is that strategic document that links all your asset information in one place. Okay, it's not the only document you would use to manage your assets, and particularly from some of the strategic and some of the capital work stuff, but certainly needs to give a concise view of what's happening with your assets and what you plan to do with those assets. So you need to make sure that your asset management plans are up to date. So again, the first thing that you'll be looking for is to make sure that your roads asset management plan has the new financial information in it, or there are plans in place to update that financial information once it's adopted by, once your statement is approved. Okay, making sure that the service levels in your asset management plans are current, they're reported on, and they actually mean something to you as an organisation. The second element of the strategic process is about risk management. So I'm reasonably confident that most organisations have some form of corporate risk management policy, and I'm reasonably confident that most councils have a corporate risk management strategy in place. What we generally like to see and we think is important is that a lot of those strategies, a lot of those risk plans generally deal with what happens if I lose my IT system, what are the risks around security of cash handling at the front counter, etc. What needs to be in those plans is some asset-related risks. What about flood? What about bushfires? What about climate change if you're in one of those areas which potentially could be impacted by it? Okay, so really your auditor should be looking to make sure your asset management plans are up to date. So the first thing you need to do is obviously have a copy of your asset management plans for your auditor, a copy of your risk policies and procedures, and show them the asset-based risks that you've identified. Okay, so some of the more advanced asset management plans will have those asset-related risks documented within each of the individual plans, and that's great. But conversely, they could also be held in a corporate risk register or in a corporate system. So again, there's no right or wrong way to be doing that. So again, this is the section which brings it together, and I said, and if you can tick all those boxes, then I think you as an organisation can be confident that no matter what happens with Special Schedule 7 in the second half of this year, and what changes or if it stays the same, as an organisation you should be able to, one, calculate those numbers accurately and consistently. So again, for those councils who we've done Special Schedule 7 work for, we always say to them, you need a system in place where the only way you can improve the cost of satisfactory is by improving the condition of your assets. Okay, so again, Special Schedule 7 starts to take on a bit of rigour when you have a consistent approach to managing it, and that the numbers are consistently calculated and improve as you go, as an organisation go along. So that's, I suppose, the councils working with the auditors to try and to get an accurate reflection of the organisation's asset planning processes. So what do you need to do? Again, you need to remember that this is the first time that your auditors have done this, and again, I emphasise this, at the moment this is not part of the financial report. This will go separately to the Office of Local Government. So it really is making sure that you and the auditors get the most out of this. Okay, so you need to make it relatively easy by making sure that your systems and processes are up to date. You know what they are and they're documented. Your asset management plans are up to date. Your corporate risk registers are up to date and available. Okay, but the process stuff around asset condition data collection and updating and keeping that asset condition data current are really important. Okay, because again, those councils involved with Fit for the Future, the key elements of that is the backlog ratio. And so getting that cost to satisfactory number accurately to reflect the condition of your network is essential. Okay, so it's no use if you've got condition data which is 2 or 3 years old and hasn't been updated with the work that's done in that ensuing 2 or 3 year period. Okay, so really important that those strategies are in place to keep that data up to date. You need to make sure that your valuation data is up to date, but also take advantage of the tools that fair value asset valuation allows you to do in terms of looking at remaining life of assets. You know, and again, part of fair value is that desktop revaluation every year, and as an organisation you should be taking advantage of that to make sure that the valuation data accurately reflects within the accounting standards the value and the loss of value your assets are attaining on a yearly basis. Okay. Probably the most important part of this process, particularly this year, we believe, is once the auditor has done his assessment, is that each council preparing an improvement plans so that you can actually have the systems in place for next year to make sure that there are no qualified or special Schedule 7 in whatever form it takes is not what causes your accounts to be qualified, okay, by your auditor. So again, once the preparedness spreadsheet has been completed, you really quickly need to work with your auditors and develop an improvement plan and make sure that that's in place, okay? The other thing, I suppose, which is going to be a trap for council is some of the bigger asset groups are generally reasonably well managed. Things like roads, most councils have pretty good handle on their roads. Most councils have a pretty good handle on their water and sewerage assets. Some of the smaller asset groups, the information is limited, is what in some cases what we've found. So there may be some work required on some of those smaller assets groups, whether it be parks and recreations, swimming pools, to sort of try and get some systems and processes so that those smaller groups also comply with the audit requirements when they do come around in 2016. So just quickly, and we'll finish off on the improvement plan, is we believe that you should be working with your auditors to try and get develop an improvement plan. They're going to have an opinion, and again, they'll also have an opinion in 2016. So you really, it's a golden opportunity for organisations to understand what your auditor is looking for now and how you work over the ensuing 9 months to try and deliver that in 2016. So again, we'd encourage you to work closely with your auditors about developing an improvement program. Okay. What should be in your improvement program is always a problem for most councils, but you really do need to identify what the key tasks are, accurately or allocate responsibility to those tasks to ensure they get done, and agree on the delivery dates. Because if you look at the timetable for the financial statements, you know, the councils are working madly now trying to get the accounts all in order. I think the reporting date for the auditors is generally sometime in October or November. If you wait to that time before you have a look at the preparedness survey, you're going to go to holidays in December. Most councils don't do much in January, and all of a sudden you're going to start your improvement program in February, which doesn't give you a lot of time to get everything in order for an audit in 2016. So we would encourage you to start looking at systems and processes really early on, identify what you need to do, allocate those dates and responsibilities, and start working with your auditors now to try and make sure that come 2016 that you guys are ready to have Special Schedule 7 audited, and when the Office of Local Government reviews Special Schedule 7 in the next 6 months, that you're confident no matter what process that they put in place that you are able to comply with that. And again, my view is very strongly that if you can tick all the boxes of the preparedness survey, it really doesn't matter what the division asks for and how they ask for it. You should be able to provide that. So that's really, I suppose, our view on the preparedness survey and where we see it going. I think Mark mentioned early on that if you've got any questions, please type them down. He's got one here which I'm having trouble reading. Someone has asked the question about, has there been any recent work on the definition of cost to satisfactory? No, there hasn't at this stage, but the division's aware that there's a whole lot of different opinions about it. I know that IPWA have put a discussion paper to the Office of Local Government. The Office of Local Government are fully aware of the Morrison Lowe thoughts on cost to satisfactory, and I think that there will be a working group early in the first part of this year which will work towards trying to develop a more rational, more logical approach to the development and the filling in of Special Schedule 7. So that's about all I have. I hope that's been useful. You can see on the screen there is my contact details and Mark's contact details. If you have any questions, please type them in because the system we're using records the questions. We'll try and compile some answers to those, and if they're relevant to the whole group, we'll certainly spread those around to everybody. But again, please fill the questionnaire in at the end of the end of the session, and don't hesitate to contact us if you have any questions or any queries. Thank you very much, everyone, for attending. I hope it was informative, and I hope you got some value out of it. So thank you very much for everyone. Thank you.